So look, I think we will get things underway now. We've got pretty much everybody online, and welcome to you all. And maybe just to set the scene for this the session today, let's just say that the past 12 months have been extremely eventful in our industry, and we've seen a huge volume of lending going through as a result of the coronavirus supported loans that the government has provided. We've seen financial institutions that previously did not have much by way of SME lending coming to the fore with very large portfolios that had been previously quite unexpected. And there's also been a dramatic shift in traditional banking. We've seen the emergence of digital really coming on stream now. Branch-based banking has quite clearly become much more difficult, and therefore the urgency of digital has really come to the fore. And we've seen, of course, new players coming into the market. The banking industry has been riding this cusp of the Fintech versus the traditional banks for quite some time. But we've seen the alternative lenders also participating in some of this lending, which has been a new thing on the scene, as well as neo brokers who've played their part in helping to channel some of that volume into the market, where small businesses have really struggled to be able to access funding. So it's really under this context that we're coming together this afternoon, and thank you to everybody that has joined. Just to talk about the different shades of digital lending and the kinds of ways in which organizations are addressing this business issue. And we have a very good group of individuals who I'll introduce very shortly to help to discuss and give their views. So my name is Marc Philippo. I'm Vice President of Sales for Ezbob. Ezbob, if anybody has come across us, is a specialist in the field of credit decisioning and onboarding for small businesses. We help banks that are looking to do that better, to do it smarter, to do it more effectively, and to be able to give their small customers an unrivaled service in the marketplace. So at this roundtable today, I'd like to just go through and introduce the team that we have. We have, first of all, Andrew Sunnigan. Andrew joins us from Validus, previously with Deloitte. Brendan Gilmore, who's Managing Director of BPG. BPG is a consulting group that bridges the gap between the old world and new world of financial services. We have Christian Ball, who comes from a consulting background, but is now with Yapily, providing infrastructure services to support integration to open banking. Daniel, who I hope will join us shortly, is Vice President of BFSI for Cognizant. We have Mark Dearman, who is Head of Digital Delivery at Synergy Bank. And Nadesh Sithambaram, who is Head of Digital Delivery also, but for Santander Bank. We have Peru Mahajan, who is with TSB as Head of Business Lending. We have Tom Bentley, who's Head of Growth at Verdino, a new banking as a platform solution provider. And we have Simon Curtin, Chief Executive of Funding Options. And I want to also thank both Simon and Brendan, who've played their part in this conference today quite extensively. Had a lot of questions already thrown at you both. So thank you for also giving us the time on this session today. So I think the first thing that we'll start off with is let's start off with the first question. We see many different variations of digital lending in the marketplace, and I guess the pandemic has, as said before, really accelerated this now. But we've seen still providers out there that have what could be termed as part digital journeys with just static forms that collect information, but then a lot of clunkiness in the back end, and perhaps a lot of manual effort going on in the back end that kind of doesn't really scale, all the way through to organizations that within seconds are able to provide a smart decision to a new applicant for a loan, and everything in between. So I guess our first question here to the panel, and I'm going to ask Brendan to go first on this, is in the context of a loan application, what are the attributes that point to excellence across the customer journey, and what should organizations be striving for? Brendan, can you take that one?
Yeah, sure. Firstly, thanks very much, Mark, for inviting me to be on the roundtable with such an esteemed group. I think in terms of digital excellence, I'd break it down, and I would say that for a policy compliant loan up to 250 grand, that should be fully automated. It should take minutes from end to end for the customer journey, and I'd say funds within about 24 hours. I think if you go above that, 250 grand to 5 million, but again, policy compliant loan, I think that should be, one that will have a little bit of complexity, maybe a bit of security in there. That should be an approved deliverable term sheet same day. And I think if that's acceptable to the customer, that should be deliverable through an ecosystem of a digital ecosystem of API linked third parties, whether that's valuers or lawyers or whoever else needs to contribute to that. Above 5 million, I think there's a bit more latitude to be digital. So I think auto assisted there is fine, because you might have to dip in and dip out with the relationship manager or with some of the third parties. But fundamentally, it's about speed and simplicity. It's about having API calls to all of the data sources to pre-populate any data that can be pre-populated, to make that simple and intuitive. And I think that has to apply through the full customer journey. So from origination through onboarding, through risk assessment, fulfillment, servicing, all the way. I think that's very easy to say. So I'm going to hand over to the panel, who's going to have to kind of describe how to do it. But that's what I would describe as digital excellence.
Brendan, that's a great answer, and I think what I am going to do is maybe just throw that open a little bit more widely. And Andrew, maybe from your perspective, maybe given the experience that you've had in the marketplace, how would you see that question being answered?
Yeah, so I mean, I would echo Brendan's point around simplicity and speed, right? Particularly in the smaller end. I mean, when you start to get up to the more complex end of lending, there's obviously more involved in that when it comes to actually managing the risk and the data that you need to make a decision. I think, I mean, for me, digital is, the ability for a customer to apply for a loan anytime, anywhere, and any means they want. Some customers like face-to-face, some customers don't. Some customers are happy to sit at home in the evening and apply via their iPad. You should have the capability to do that at any point, at any time. So, 24/7. Again, it's all about, I think one of the biggest things is speed to decision. I mean, customers don't necessarily need the money right now, but what they need is, am I actually going to get the money so I can then go on and carry on the conversations that I have around whether it's purchasing an asset, etc. And I think the big thing with digital now is, before it was a lot of paper pushing around, there was a lot of handoffs, there was a lot of customers not actually understanding where they are in the process. And clearly, you've seen investment in certainly the smaller end, that's improving massively around transparency of what do I need to give you, and how are you making a decision, and when will I get a decision, and then in essence when am I actually going to get the money. So I think digital is speed, it's simplicity, but it's opening up the ability for a customer to apply for a loan, as I say, anytime, anywhere.
And that's quite a big change in the market, isn't it? Because it wasn't so long ago that, please excuse me, that prior to open banking and prior to the pressure that we've now seen, on the market being, brought to bear by some of the slicker and smarter players that have come into the market in recent years, that expectation of service was actually at a very low level, and that was largely driven by bank processes being much less able to deal with that slickness and that speed of customer service, and applications getting stuck in the different silos of banks as it progressed down the path, with a lot of manual intervention and need for physical view of documentation as well. Simon, from your point of view, I mean, coming at it from very much more from a broker perspective, I guess that you know, you've seen a lot of volume coming through funding options as a result of the pandemic. What impact has that had on your business?
Sure. So great question, and I echo the comments of the other panel members, and it's great to be here, Mark. Appreciate the invite. So our platform, the vision for us is obviously to be the leading platform for SME finance, and what that means, going back to your first question, is essentially a platform that can deliver as near to real-time outcomes for businesses as possible. And sitting behind that is very much a no smoke and mirrors approach, because that's effectively what I interpreted from the question earlier on. There's still a lot of smoke and mirrors around the sector and around the industry, and it is what it is, and it's obviously, you know, different organizations move at different paces. But we at Funding Options, we're absolutely focused on delivering a fully digital journey. Obviously, the coronavirus, you know, the pandemic conditions have massively accelerated digitization, which has been hugely advantageous. You know, we, like many others, were early adopters of open banking. Again, that's a major innovation that has allowed us to push our capability forward. And we are at the point now where we can offer effectively instant decisioning to businesses who are looking for funding. I can think of multiple examples where that happens with us every single day, and that's a fantastic achievement. One of the challenges that's always put to me is, you know, can a platform or can a digital journey, you know, can it replace humans? And this is always a really interesting dynamic, and we're very committed to a hybrid model between the tech and the human. Because for us, I believe, you know, we will achieve and have achieved much more success with that hybrid model. But from a digital journey perspective, the capabilities we now have are far outstripping where we were even 12 months ago. And my opinion is that this is only going to snowball. You can see advances coming sort of, you know, left, right, and centre. And for us, I think that will only be to the benefit of SMEs going forward.
That's a fantastic answer. Thanks very much for that, Simon. A very full answer as well. And you know, you touched on the this whole issue around to what extent are we digital and to what extent are we personal. And I think that was a really interesting aspect that you were exploring there, because you know, there is that balance of wanting to have things as quick and as slick and as fast as possible. But of course, there are also those times where you need to have that phone call, and you know, you need to have some interaction with the client, and it's where that journey breaks in, and that it's a natural part of that process, as opposed to being as a result of inefficiencies that you know, we see. Nadesh, can I ask you? So from your perspective, looking at Santander and looking at the experiences that you've gained over time, what are some of the challenges that you're seeing in regard to digitization?
Sure, Mark. Firstly, let me thank and echo some of the other comments. Right, really appreciate the invite. Great to be part of this. I'm in the danger of repeating some obvious statements here, but needs must. Digital transformation typically doesn't fail because of the technology capabilities, especially in larger organizations, you know, certainly in financial institutions and other big corporate firms. But it's just the positioning, the commitment, the sponsorship, and you know, lots of softer side of things. That's where we've seen it fail, if you like. And from where we are in Santander, and you know, some of the best practices that we've seen in organizations in the current climate, is that focus and shift change on from a sponsorship perspective. Certainly in our organization, digital transformation is absolutely at the highest priority, and it's there's no doubt about the need for it, and how it's being prioritized, if you like. So pitfalls, I would say, make sure we've got the right sponsorship in their organizations for it to succeed before anything, even before a technology question. Coming back to in terms of the specific technology aspects, as to echoing some of the other comments, what we've seen is a fundamental shift and a change in terms of banks' approach in approaching the financial and digital transformation, moving away from build everything to let's be more open to what's out there in the market and be open to actually utilizing some of the best practices and components that are out there. And that is an interesting shift. And in terms of that's also brought some synergies, collaborations, working with smaller fintech organizations. Open banking has really opened that up, and the opportunities that have presented is just expedited some of that thought process, if you like. And I think the related point around stakeholders and who the key stakeholders are, if you like, in that transformation journey. Again, the reason why we've seen transformations fail is not, again, because of technology per se, but the lack of ownership between the control functions, the policymakers and the banks, if you like, and where the technology aspirations are. And I think certainly in our case, that's the area where we focus the most of our efforts on, in terms of understanding the policy requirements, delivering to that, if you like. So whatever efforts can be focused, and that's where the energy needs to go into, in making sure we could run at a speed in making the technology work, but ultimately, if the control functions are not satisfied, you're at a roadblock, right?
I think that is such an interesting point, and what we see in the marketplace as a provider of services to banks looking to embark on this journey, as it were, is that there are always the different stakeholders and interest groups within organizations within these banks. And some of those stakeholders have got, understandably, some fairly traditional ways of operating, and might see a project like this, a bank embarking on the digitization of a process that and departing from what has been known and loved over many years, quite frightening. The idea that a machine is now going to be making an authentication decision, or the machine is going to be making some form of credit decisioning, can be, quite a startling aspect to have to get your head around. So I think your point is absolutely valid then, Adesh, and a really interesting one, which is trying to bring everybody along. Marc, I've seen you coming in and out of the session, and I hope you're not having any problems there. But from your point of view, Synergy has embarked on quite a number of different initiatives. How do you see this issue, and how do you look to address it? I think you're currently on mute. I'll tell you what, we'll move on to maybe Christian. Christian, can I perhaps pose a question to you? And the question is, looking at the complexity of digitization within banks, and bringing the different stakeholders along with you and making sure that no one gets left behind. From your experience, how do you find is the best way of embarking on a project?
Well, it's a great question. I mean, there's been some really good points here. So we've done to death the really insightful comments about customer experience. I think Nadesh's comments around the approach to utilizing components for execution. It's a natural progression of our digitized economy, is that using services and solutions and components to thread together to deliver new solution. We've got cloud providers who help orchestrate that. We have other organizations do that. So we're going to see more of that. So the older approach of a soup to nuts software solution that did everything for you, allegedly making everything easier to implement, those days are gone, I think. And we'll just be more componentization of solutions that provide best components. And because of the enablement of APIs, I mean, Yapily, we're an infrastructure API provider, right? So what we do is we allow any organization access to both the data and payments capabilities in regulated markets. We've seen, not surprisingly, a big increase in interest around the payment side over the last 12 months, and now the data engagement is rising with respect to lending in particular. Lots of interest around solution around AI for machine learning as it applies to KYC and for anti-money laundering, and bringing more data. We're going to see we're engaged with regulators on a frequent basis and attend many of the forums that regulators pros. And so the Open Finance Initiative that is now being mooted is going to create an even richer data set for organizations. So there were some comments I saw in the feed, as well as some of the references in the conversation here, around the quality and the efficacy of data to drive decisioning. When all of the relevant industries, whether they be insurers and the new product sets, are all captured by regulated APIs within our markets, the ability to drive much more accurate, insightful decisioning is just going to be enhanced. From the start point for us, we don't drive the end innovation with any of our clients or banks. We provide you with an infrastructure play around the API. So we take away the pain of trying to stay regulated against X number of banks who frequently keep modifying their APIs. And I said little comments. From my experience, some of the banks moved out. They separated out retail from SME banking and SME lending, for example. And so I think our approach is just being very much a partner for the innovation of the end client, whether they be solution providers, cloud providers, or banks.
Brilliant, Christian, and great plug for Yapily there. We won't charge you anything for that. I'm going to see if I can come back to Mark again. Mark, are you able to hear us?
I can just about hear you. Hopefully, I've turned my camera off.
Perfect. Fantastic. We're all battling with the challenges of home bandwidths that haven't quite kept up with the amount of Zoom calls that are going on. So Mark, glad that you've been able to join us and that you're able to hear us. So, Mark, I know that Synergy has really gone through quite a transformation as an organisation, both in terms of its ownership and its ambitions and where it's going in the market. And as part of that, I know that you've been on quite a transformation journey in regard to the platforms that the bank has used to date, and how the new platforms that you are now looking to construct, will support that. In terms of the priorities, looking at it from a customer perspective, looking at some of the challenges that you face also because of the different types of lending that Synergy does in the marketplace. What would you say from your point of view have been the biggest hurdles that you've had to overcome as part of that journey?
Yeah, so thanks for that. Sorry, folks, I've had some audio issues. So I'm not quite sure what the other participants said, but some of the biggest things for Synergy Bank have been adoption, both internal and external. So we're a bank that's got 60 years worth of history and a certain customer set that probably isn't used to technology. So taking our customers along that journey and improving adoption has been really critical for us. And also inwardly looking, we're all probably working with people that can be a little bit uncomfortable with technology. And I've heard of this before about compliance and FinCRI, all having particular issues going down a digital. These adoption issues are going to be live for us as we go along this journey. Probably not helped by a high profile case of customer data being lost and things like that. So we all have a responsibility to ensure that we take these stakeholders, both internal and external, along the journey with us to build trust. And I think that for me, there's for Synergy Bank along the way. But with that comes a shed load of good and positive news as we go down automated ID and V. And I've heard a few people speak about automated credit decisioning. All these things are fantastic. But again, it takes time for people to adopt it and to trust the system. So that for me has been the biggest hurdle so far. But it hasn't been a hurdle that you can't overcome. It's about bringing those customers and those internal stakeholders part of the journey, part of the design, part of the testing, and part of the requirement gathering. Because ultimately, digital is here to help everybody, not just the customers, but us as financial institutions, and you guys as partners as well. Because if we've all worked together, ultimately the end customer will judge us. And I think it's incredibly interesting how the language has changed, certainly within banks, about customer journeys, improving them. And if I hear the word clicks any more time, even at Exco level, it just goes to show how banks are just starting to come in tune with how customers judge us. So clicks is the new buzzword, certainly at Synergy Bank.
Yeah. Brilliant. Thanks for that, Mark. Very, very valuable insights, and good luck with that journey. Peru, I don't know if you can hear us, but I'd like to maybe just turn to your experience at TSB. I know that TSB's clearly had its challenges in the market, and has moved into SME lending as a result of the bounce back loan scheme. And I know that you're embarking also on a technical renovation process. Maybe some insights from yourself in terms of what some of those challenges were, and that you've had to overcome internally, and how you've embarked on that.
Yeah, definitely, Mark, and apologies everyone. I did have some challenges logging in, and as we speak, I'm logged in from my phone, and the camera doesn't seem to work. So yeah, in terms of challenges, yes. So you're right, Mark. We kind of got into the bounce back loans last year, and we have sort of scaled up lending significantly compared to what it was prior to that, and part of that was achieved with some digital adoption in the form of like simple application forms, but with sort of manual processes backing it up in terms of running off the loans and drawdowns. We are also exploring as you have mentioned, started looking at end-to-end digital lending journeys, and I think the challenges I wouldn't say are very different from what I've heard so far. I think there is a big consideration around the risk function and the control functions in banks, and trying to sort of get them early on in the journey, and sort of get their buy-ins and inputs from risk assessment perspective. So be it financial crime, be it fraud, or be it credit risk. But ultimately, if we want to deliver a good customer experience for a digital application, you would want most of these checks to be automated. And really, how do you kind of get that trust between what the risk stakeholders currently trust the third parties they use and the kind of checks they do, versus, let's say, if you are getting in a partner, then the delta that exists, how do you sort of bridge that? And I think that's a very fundamental challenge, and I'm sure it looks different in every bank, but it's quite an important one to overcome. And the second piece, I would say, is around the sort of, the core systems and like, again, a decision on, whether you want to use your own core systems, because it helps a lot, with back-end processes and downstream reporting and, knock-on impacts therein. But again, core systems are always not fit for purpose for the type of lending you may want to do in a digital world. So again, that's, I found is a second big sort of an area for consideration for banks. And again, an early thinking around that, and, getting the right stakeholders involved from, the technology and IT teams definitely, helps, speed up the process. And, the sort of third area, again, more from a, good digital experience perspective, is documentation. And again, I think it's quite paramount to have, like e-sign capabilities and documentation process, which, customers can, do digitally rather than, like sending them papers and things for them to sign and witness. And again, that kind of comes along with, that buy-in from risk stakeholders, because you may have to make some concessions and levers to probably how banks have been traditionally working. So yeah, I think those sort of three areas, in my mind, really are the key things to look out for. Does that help, Mark?
That does help, Varun, and brilliant points. And thank you for that reflection. And maybe Tom, I can bring you in here, because I know that you've had quite a lot of experience with some of the new players coming into the market in terms of their positioning in the digital fintech world. Any thoughts from your side on some of the things that we've talked about?
Yeah, thank you, Mark, and obviously being part of this panel. To kind of continue from Peru, I think plumbing is essential in this sort of world, right? In this journey and contextualization. So, Christian was talking about the APIs, the access to the regulator, but ultimately you need to think back to the ledger and where you're holding that, central point in the way that you look at a customer. To spin it, a little bit on the movie theme, we haven't talked a lot about 50 Shades, which was utterly disappointing. It's why I joined the panel, to be honest. But Walt Disney, right, got rejected for a bank loan 300 times. Of course, it was a different era. But for me, it's the art of rejection and how you sort of model that back into the process. And the problem is, as you look at, face to face, someone can go away, the old school movies, have the chat with the bank manager. The more you digitalize that process, the more sort of touch points you have to consider. And of course, then always mirror that back to the ledger, where actually you're going to hold the account and how you're going to service the customer. So for me, I think we've seen some really interesting models which actually leverage some legacy infrastructure to, move quickly, speedboats from cruise ships sort of example. But I also think what is fundamental is that digital can sit standalone, right? You can have decision engines and very cool and slick credit processes, Klarna and others have proved this, that sort of sit outside of that wider mainstream. There's one thing I really want to touch on just before, finish that point. And I think it was Nadesh who brought this up. I think the one thing that we don't talk enough about is the art of rejection. So many, being a millennial, I've just bought a house, I've just had a baby. So I've gone through all the life journeys, right? Where, maybe you might need credit for some things. You might consider that mortgage application, how you look when you've gone through these life events. The actual art of understanding what you're willing to give that customer and how we utilize that soft search capability, that contextual advice. I'd say 70% of institutions that I look at are calculators, which aren't contextual. They don't deal to the personal situation where you can be a high flyer, but you've decided to do all the major life events in one go. So to some of the institutions that are on this call, where you've got that deep big bank experience, or the challenger who's willing to offer you that catalog of services, again, it comes down to, can you plumb all those decision points and look at that person at their stage of life? I think now, if you took Walt Disney, considering what you'd done at that point, I think that 300 rejection list would reduce significantly.
Tom, I think that's such a valid point, and we don't think enough about this, because we think about things in banking very much as products, but we don't necessarily think about how those products come to bear in a person's lifetime, and the ability for an organization to offer the right product at the right time intuitively, rather than the customer having to ask for it, is a very powerful aspect of what you're talking about, and clearly technology has a big part to play in that. Good. Now we've got a couple of questions that have come up on our panel, and one of those is from Dan Feeney. Thanks, Dan, for your question. Dan's asking about the lessons learned by the bounce back loan scheme, and especially around false identity fraud. So maybe, Andrew, I don't know if you want to maybe just kick us off on that particular point, and just thinking about the the bounce back scheme came at us quite left field. I don't think anybody was expecting the government intervention to the level that it was orchestrated. And also with the minimal checks that the bounce back scheme provided. So from your perspective, and maybe taking some of your experience in this, what would you say to that?
Yeah. So I mean, Mark, you and I both have pretty much first-hand experience of this landing, coming in from left field and having to react very quickly, which I mean, I found quite exciting, albeit it was clearly a terrible decision, but it was exciting for the fact that you could see the potential to have an impact on what was happening and actually supporting these businesses. And it also drove the change in mindset within the particular organization around, we need to get this out now, and you're going to have to start building or taking some trust in what we've been telling you for months about what we've been building more longer term, and accelerate it. And I think what it did was, particularly when I look at kind of the fraud and AML positioning, well, you always get challenges from those areas, right? As the technology. And to be honest, I think part of the challenge is that you've got other technology companies who come along and say, well, we can do this for you, and oh, what about we can do this for you? And everybody comes across with different solutions, all trying to solve the same problem. I mean, that at times confuses me. Well, which one do I trust then? Because I've now got 6 of you all kind of saying you can solve the same problem, but you all do things in a different way. But what I think it did do was, as I say, get the commitment from those areas like fraud and AML that the way they were built operationally, they could not have delivered a solution for bounce back loan with the current operating model they had in place. And they had to take the risk in a way and the trust of technology. Otherwise, they would never have been able to serve it. Now, I think when we talked about it, Ellen, I've heard it mentioned a few. I mean, one of the biggest challenges is actually getting the buy-in from the business, right, for technology and digital solutions. You need the buy-in from the around the table that, they are going to have to take a level of risk and a level of trust. But if you want to move forward and have the ability to serve your customers, especially at the speed we had to serve customers around the bounce back loan scheme, then you have to make some hard decisions and take some risk. What I think was interesting was we did push them to take some risks and make some decisions. But over a period of a few weeks, you saw the confidence growing. Things were popping out into the queue from a fraud perspective. We were identifying fraudulent applications. And all of a sudden, everybody's buying into the technology. 6 weeks ago, before we launched it, everybody was questioning the partner we were using. Everybody was questioning the technology we were using. All of a sudden, we've been forced into a corner. We're going to have to just trust and go ahead with it. All of a sudden, you've got confidence growing over time. So I think that's some of the lessons learned, that maybe we have to build that trust far quicker in some of the technology and some of the solutions that we have. I appreciate it's not an easy thing to do. And as I say, I think there's so many technology partners and vendors that are trying to almost solve for the same problem, but are kind of explaining it in a different way. Who do you trust? But I would say one of the biggest lessons I've had from it is, you can actually start to trust this technology, because we've kind of proved it, and we got forced into a situation where we had to trust it. And now I think we're going to come out better from it by changing the culture and the mindset within some of these organizations that, technology is actually better than using Excel spreadsheets and people, especially if you want to start to scale.
Andrew, I think some points, points very, very well made there, and you're absolutely right that when you look at organisations, look at banks that have participated in the bounce back loan scheme, who perhaps previously it would have taken, if not months, maybe even years, to decide to implement the kind of credit decisioning capabilities that that the bounce back loan scheme demanded. and doing that literally within within weeks, and building up the kind of volumes that might have taken 5 years to build, but building that up over a couple, again over weeks. You would never have. You would never have believed that to be the case, and I think that we've got the Metro case study out in the market, which was sanctioned by Metro, which talks about that bounce back loan project, and certainly in terms of the straight through processing, the ability to process straight through at something like 94% of applications all the way through was quite remarkable. So I think there's been a big learning curve in the marketplace, and that's echoed in other aspects of what's been going on in society at a broader level. That you can do a lot with technology. And I guess, Simon, again coming back to you. Perhaps if you would maybe give your thoughts on that, because you were kind of thrown into the cauldron here as funding options on the cold face of those applicants that couldn't get their bank to respond for whatever reason, and in desperation we're turning to organisations like Funding Options.
Yeah, appreciate it, Mark. I think Andrew's articulated it incredibly well in relation to the Bibbles side of things. I think that was a challenge that, unfortunately, we didn't really have the opportunity to participate in to any great degree. We're I guess, working perhaps a little bit closer with the alternative finance providers, and I don't think many, if any of them, really got to look into Bibbles, but that's a whole different discussion. Where we saw enormous demand, obviously, was where customers clearly would come to us if, for example, they were having some frustrations with the Bibbles process. Without going down a rabbit hole, there were obviously challenges in terms of the lender supply side, clearly back in Q2 last year, as the market was readjusting and trying to work out, what are the points of reference in this new pandemic world. It was incredibly challenging. We saw billions of pounds of demand come through our platform, but where we've really come to the fore is working with a very broad spectrum of lenders, more in relation to the civils loans. Contrary to popular belief, there are also some lenders who are still lending outside of the government schemes, but obviously that's been impacted enormously. We saw a lot of success, or rather we've helped to deliver a lot of success on behalf of our customers in relation to civils, where, again, for whatever reason, some of the processes weren't working optimally with the banks. But it's easy to sit on the outside and criticize isn't the word I'm looking for, but sort of point out what could be done better. But the challenge that the banks have had in terms of the scale of the issues and the spectrum of demand and the different products, obviously, that they're on the hook for in the customer's eyes, that was clearly something that was enormously challenging. So I do sympathise. Again, I think looking forward, we're in a far better place, and I think we need to take all of the learnings that we've had over the last 12 months and really put that to good use to make sure that we are all more resilient and more capable going forward.
Very, very good points made there. Thanks very much for that, Simon. And we've got a question from Adozi, and I think, Brendan, I'm going to ask you if you could maybe come in on this one, because I think you touched on it earlier on in your answer. Adozi is asking about what would need to change to facilitate £250,000 plus lending to become largely digital. And she goes on to say that she knows that there have been points made on security, etc., but it would be interesting to hear the major limiters that have been in the marketplace regarding digitizing microloans.
Yeah.
So I think the first part of that question, £250,000 and up.
I think there are solutions out there that can digitize most of that process. And actually, I just sort of build on some of the points you and Andrew made there. There's lots of different solutions to this, and it's often the biggest difficulty inside a bank or a big institution as to who to believe. and you have all of these competing sort of priorities and different people coming with different suppliers, and salespeople in suppliers oversell things. So you kind of get 6 months into a project and realize that it hasn't worked. But yeah, I think there are solutions out there for every step of the customer journey, whether you build, whether you buy, whether you partner for lending above 250,000. But ultimately, it comes down to the risk appetite of that lender. If they don't want security, then they need very good credit risk decisioning support from people who understand the SME space, and there are very few who do, to do unsecured lending to SMEs above that level. So as soon as you introduce a risk appetite that says I need security, or I want a guarantee, or I want some other form of support, you're introducing friction. And where that falls down at the moment is that there's an over-reliance on an independent valuer to come in and give a valuation for a property to be considered worthwhile funding at a certain level. There's the whole process around a solicitor confirming title. And that part of the chain is actually what extends and adds friction at the moment. I think there is a solution where they can become part of that digital API-driven ecosystem, and they're more proactive in how they engage. But at the moment, a bank tends to approve a heads of terms and then send it out to a valuer and say, will you please value? And they come back 2 weeks later and say, we can have an appointment whenever. And similarly with a solicitor, they only engage after most of the work is done. And you leave the customer in this sort of in the ether, wondering whether the money is going to be there or not. So I think to answer the specific question, what changes? I think more of the ecosystem needs to get on board in embedding what they do with the end-to-end process. And that's true of mortgages as much as it is of SME lending. But yeah, I'll stop there. So hopefully that gives a flavour.
No, I think that's a very valid point, and I guess that as soon as you're talking about those higher values, I think the point you're making is that there are 2 points really. You've got the external stakeholders that are part of that process, and of course that's where there's friction coming in, together with the fact that there's a higher level of scrutiny required. And so I think from a technological and credit decisioning point of view, there are not necessarily the limiters there, but it's everything else that's going on. Very interesting response to that question. Thank you very much, Brendan. And we've got another question from Alistair Milne, and Alistair is asking, what role for data standardization and data sharing to support scalable solutions? So this was actually one of the questions I'd wanted to ask the panel today, which is all around how we're using data and how we can maximize data. And maybe, Nadesh, from your point of view, if you could maybe come in and give us your thoughts on that.
Sure. No, it's an area that's very close to my heart, because I also act as the head of data delivery in Santander. So I think the role of data, how data is viewed in organizations, is really changed. We went from data governance, a culture of CDO, all the way through to data for digital. That's kind of where we are positioned in the marketplace, especially the banks. Historically, there have been a number of issues, integrations and acquisitions of, banks, building societies, which led to multiple number of legacy systems, number of, different data models in the organization. So there wasn't a single customer 360, if you like, historically, but that's obviously changed and is changing rapidly. So one of the challenges that we've seen in the marketplace around the data part is this differing data models and the banks and organizations' inability to change and transform rapidly. I'll give you some very specific examples. The way the operational systems set up may dictate the number of minimum data items that you might need to capture in an onboarding journey. That causes friction. That causes additional, time and the processing that's needed. On the flip side of it, you might actually have a policy change, meaning there are some additional data items that are needed to be captured. And to make that change downstream is, again, fundamentally difficult and is time consuming. All of that leading to, the speed to market, affecting the speed to market, if you like. we're seeing a number of opportunities out there, both from a technology perspective and the mindset perspective, that helps us alleviate it. The availability of super rich data sets out there, the ability to do digital IDMV, leading to reduction in the number of questions that we're having to ask, the amount of processing that we're having to do, etc. So there is an ever-changing landscape out there, and also we're seeing a number of new technology products that actually are off the shelf, out of the box solutions that are actually helping. And it's this, and the final point that I'd make on there, conscious of time, is this shift, if you like, from an application back data architecture to data out, methodology, if you like. It's about the usage and the sharing of the data that's more important about what an application actually needs. I'll stop there and to take any follow-up questions.
No, Desh, that's a fantastically good and very comprehensive answer. Thank you very much for that, and certainly shines a spotlight on the complexity around that particular question, and how we manage all of these various data points. I'm going to just go back to the chat line, the chat again, and we've got a question from George Ravitch, who's asking, is digital transformation more important for the customer-facing application process or in the back office processing? And I don't know if we still have Mark on the call. I know you've been having a lot of problems connecting, but anybody want to have a go at that one?
Mark, just very quickly, I would say it's actually both. I don't think you can really draw a determination against one or the other. I think it's reasonable to say that there was a initial major push towards customer experience investment early doors, and now technology and the access to data and capabilities of services is driving a review and a renewal of that customer experience. So there's synergy. I don't really think it's one or the other, frankly.
Perfect.
And if I could just add to that, Mark, I mean, I don't like the term back office anymore. And you'll see that, businesses have gone to talk about end-to-end journeys, right? Everybody's part of the journey. You're not a back office function. You're not a front office function. You're a part of the end-to-end journey. And that's why people are transforming the end-to-end journey. I think there's definitely, I mean, you can paint a pretty picture, right? Everybody likes all the UX, UI stuff that you can put in front of a customer and it looks fantastic. And honestly, we've been doing that for years, where it's a simple online form. And then you go in the back office, as they called it, and everybody's pushing paper about. And people are, I mean, I couldn't believe in some banks 6-7 years ago when you went into the operations and there's people waiting on paperwork to arrive by post that's being sent by second class. It gets put into a box and then they slowly work their way through the envelopes to check all the information, right? So clearly it looked great from the customer point of view because they filled in an application online and they think, right, I pressed the button, now what? And then obviously you see all the operations, moving things around, things getting lost. So I would prefer to not to talk about back office anymore. I think we should talk about the end-to-end journey, and that's what we transform, the end-to-end journey. But clearly we can do anything up front in front of the customer, make it look pretty. But if you don't solve the full end-to-end, you're not really going to transform anything. Would be my point of view on that question.
Andrew, I couldn't agree more. And actually, I think there is a defensive legacy. The neobanks are held up as the digital principles. But when something breaks or goes wrong, as I experienced from moving my life from Australia to London with one particular neobank, being able to actually talk to someone about the process, things that you've asked for, bots which you kind of pick up, get dropped, and you go into this vicious cycle. So I think, again, this is the whole blurred line between personalization of actually having someone, a contact point in these more complex lending models compared to, complete straight through data provision where great if it works, when it doesn't, you just worry that your credit score's impacted or something's going to go horribly wrong in how you're seen in that wider credit spectrum.
Yep. Very, very good. And I think that very neatly brings us almost to the end of this. We've
lost your audio, Mark.
Yeah,
I think you've gone on mute, Mark. Yeah,
somebody muted me. I want to just say thank you to the panel. Thank you so much for the points that have been made today. I think they've been very interesting and coming from real raw experience. And I think the second point is that Ezbob has a Peloton bike, which is up for grabs for anybody that wishes to enter our competition. You know, we all need to get fit out there, so please do go ahead. Ricky's got one himself. So do apply for the competition and put your names in. Gentlemen, thank you very much. It's been an absolute pleasure, and thank you for participating today.
Thanks,
Thanks for
everybody.
the invite. Good
All right,
to meet you all.
great.
Take care.
Thanks, all.
Bye.
Bye, everybody.